All right, so today we're going to be taking a deep dive into NXP Semiconductors' third quarter 2024 earnings results.
Okay.
You sent over the report, investor presentation, a couple news pieces.
Yes.
So we're going to cut through the noise and figure out what's really going on with this chip giant.
Absolutely.
Think of us as your personal NXP analysts for the next few minutes.
Yes, exactly. We're going beyond the headlines and the knee-jerk reactions and thinking about what these numbers mean for NXP now and, importantly, what they might signal about the future.
Okay, perfect. So for anyone just tuning in, NXP is a big player in the semiconductor world, especially when it comes to chips for cars, industrial automation, even things like mobile payments. Now, the revenue came in at $3.25 billion this quarter.
Yeah, which on the surface, that sounds a little underwhelming. 5% drop year on year. But here's the interesting part. That number is right in line with what NXP themselves predicted.
So it's a classic met expectations scenario. But we all know those two words can hide a lot. Is this a good met expectations or a sign of trouble brewing?
That is the question, isn't it? The global economy hasn't exactly been a smooth ride lately. So the fact that NXP hit their target suggests they have a pretty firm grasp on their business and the headwinds they're facing. It suggests a certain level of stability.
Okay, so they're not getting blindsided, which is a plus.
Right.
But their press release kept touting resilient profitability. Is that just corporate jargon? Or are they truly weathering the storm better than others?
Well, I think there's substance behind that claim.
Okay.
NXP has been strategically focusing on high-value segments like the automotive sector, which we'll get into more shortly.
Right.
They've also been making some smart investments and keeping a tight rein on costs. So all these things contribute to that resilience they're talking about.
Interesting. It's like they're battening down the hatches, but still charting a course forward.
Right.
Now let's talk segments.
Okay.
NXP breaks its business down into automotive, industrial, and IoT, mobile and communications infrastructure. Automotive is still their biggest breadwinner, right?
Absolutely. Automotive brought in $1.829 billion this quarter.
Wow.
That's a 6% increase from the previous quarter.
Okay.
However, that being said, it is slightly down year on year.
So a bit of a mixed bag there. What's driving that performance?
Well, remember that global chip shortage that was plaguing the auto industry? It seems to be easing, which might be impacting NXP's growth rate.
Okay.
However, demand for vehicles, particularly electric vehicles, remains strong, and NXP is a key supplier of the specialized chips that those vehicles need.
So they're riding the EV wave, which makes sense given the industry's trajectory.
Absolutely.
What about the industrial and IoT segment? That seemed to be a sore spot this quarter.
Yeah, unfortunately, revenue fell 9% quarter-on-quarter, landing at $563 million.
Okay.
So this raises a critical question. Is this an NXP-specific problem, or is the entire industrial sector feeling the pinch?
Yeah, give us the expert take. How worried should we be?
Well, the global economic slowdown is definitely playing a role. Businesses are hesitant to invest heavily in new equipment and technology when the outlook is uncertain. Plus, Europe, a significant market for NXP, is facing some unique challenges right now. In fact, one of those new snippets you provided highlighted that weakness in Europe and the Americas, which is reflected in their Q4 guidance.
So external forces are definitely at play. Is there any indication that NXP is lagging behind its competitors in this area? Or is it more of a tide is going out situation?
It's a little premature to say for sure.
Right.
We need to compare NXP's performance to its rivals to get a clearer picture, but those broader economic trends are definitely a factor.
Okay, so something to keep an eye on.
Right.
Now let's shift gears to a brighter spot. Mobile.
Yeah.
This segment saw a surprising 18% jump quarter on quarter.
Yeah.
What's fueling that growth?
That's a great question. It seems they're benefiting from the increasing adoption of mobile wallets and digital identification solutions, areas where NXP is a leader. They also supplied chips for various other mobile applications, so it's a multi-pronged success story.
That's impressive. But is this kind of growth sustainable?
That's the question, isn't it?
Yeah.
It's possible that some of this surge is linked to specific product releases or customer wins that may not be replicated in future quarters.
So a healthy dose of cautious optimism is warranted.
Right.
We've talked about those individual pieces, but what about the big picture?
Yeah.
What's NXP's overall outlook for the coming months?
Well, their guidance for Q4 projects revenue between $3 and $3.2 billion.
Okay.
That's a bit lower than what many analysts were expecting, suggesting that NXP is taking a somewhat conservative approach, acknowledging those macroeconomic uncertainties we discussed earlier.
That's sensible, but it sounds like they're not just hunkering down and waiting for the storm to pass. Their investor presentation highlighted some pretty significant investments they're making.
You're absolutely right. They're not just reacting, they're proactively positioning themselves for the future. In particular, they have joint ventures with TSMC and VIS to build new manufacturing facilities.
That's a bold move in the current climate. What's the strategy behind that?
It's all about playing the long game.
Okay.
Semiconductor manufacturing is a complex and time-consuming process.
Huh?
By investing now, even amidst a downturn, they're ensuring they have the capacity to meet future demand when the market inevitably rebounds.
It's like they're building the ship while everyone else is bailing water.
Exactly.
I like that mindset.
And they're not just focusing on sheer volume.
Okay.
They're also doubling down on product innovation, especially in areas like electric vehicles, AI-powered edge devices, and secure industrial applications.
So it's a two-pronged approach.
Yeah.
Expand capacity and develop cutting-edge technology.
Right.
Is that a wise strategy when times are tough?
It's a high-risk, high-reward proposition.
Yeah.
Investing in innovation can give them a significant competitive edge down the line, but it requires substantial resources.
Yeah.
Especially when many companies are tightening their belts.
It'll be fascinating to see how that plays out. Speaking of betting on the future, let's talk about shareholder value, Barry. NXP allocated a hefty $564 million this quarter to share repurchases and dividends.
Yeah.
What message are they sending with that move?
That's a significant statement representing 95% of their non-GAAP free cash flow.
Wow.
It shows they're confident in their long-term prospects and they're willing to put their money where their mouth is.
So how does that compare to what other semiconductor companies are doing? Is it a good sign for those holding NXP stock?
Well, it's a bolder approach than some of their peers are taking, which suggests a strong belief in their ability to navigate the current turbulence and emerge stronger on the other side.
It's like they're saying, we're not just surviving, we're thriving, and we want our investors to share in that success. But let's be honest, no company is entirely immune to challenges.
Of course.
What potential roadblocks or disruptions should we be aware of when it comes to NXP?
Well, one factor that wasn't explicitly mentioned in the materials you provided, but is worth considering, is the increasing adoption of RSEV architecture in the semiconductor industry.
RASCV. Refresh my memory on what that is and why it matters for NXP.
Think of it as the open source movement coming to the world of chips.
Okay.
RISC-V is an open source instruction set architecture, meaning anyone can use it to design and manufacture chips without paying licensing fees. So this could be a game changer, potentially disrupting the established players, including NXP, who primarily rely on licensed architectures like ARM.
So it's a potential disruptor, a wild card in the deck.
Right.
How is NXP positioned to handle this evolving landscape?
That's a key question we'll explore further when we look at NXP's investor presentation and long-term strategy.
This is where it gets interesting.
Yeah.
All right, we left off talking about RISC-V, this potential disruptor in the chip world. You mentioned it wasn't explicitly addressed in NXP's materials. Does that mean they're ignoring it?
Not necessarily. While they haven't made any grand pronouncements about RSEV, they're undoubtedly aware of its potential. Companies like NXP are constantly scanning the horizon for emerging trends and competitive threats. It's more a matter of when, not if, they'll reveal their strategy.
So they're playing their cards close to the chest for now.
Okay.
But for investors and industry watchers, it's definitely something to keep on the radar. Let's dive deeper into NXP's investor presentation. They keep hammering on this secure edge concept. What does it actually mean, and why are they so focused on it?
It's all about the increasing intelligence and connectivity we're seeing at the edges of networks. Think about the explosion of smart devices, everything from smart homes and wearables to industrial sensors and connected cars. These devices are constantly gathering and transmitting data, which creates a massive opportunity.
Okay, so it's the Internet of Things, but with the security layer on top.
Yeah.
But how does NXP fit into this equation? Are they just making the chips that power these devices?
It's more than just the chips themselves. They're providing a comprehensive suite of solutions, including the software and security protocols, that are essential for ensuring these devices operate reliably and, crucially, safely. They're aiming to be the go-to provider for what they call the secure edge.
So they're not just building the brains of these devices, they're also building the safeguards, the immune system, if you will.
Yeah.
That makes sense given the growing concerns about data breaches and cyber attacks.
Precisely. They're recognizing that as our world becomes increasingly interconnected, security is paramount. It's no longer just about protecting data centers, it's about protecting every point of interaction in this expanding network.
It's like they're anticipating where the puck is going, not just where it is now. That kind of forward thinking can be a real competitive advantage.
Absolutely. Now, speaking of competitive advantages, let's circle back to those strategic investments we touched on earlier. Those joint ventures with TSMC and VIS for new manufacturing facilities, those are significant moves, especially given the current economic climate.
It does seem counterintuitive investing heavily when many are cutting back. What's the rationale there?
Remember what we said about playing the long game. Building a semiconductor fabrication facility is a massive undertaking. It requires billions of dollars and years of planning and construction. By investing now, NXP is signaling their belief that demand will not only recover, but will surge in the coming years. They're essentially securing their place at the table when that happens.
So it's a calculated risk, but one that could pay off handsomely if they're right.
Exactly. They're betting that when the global economy rebounds and the chip shortage eases, they'll be in a prime position to capitalize on the pent-up demand. Plus, by expanding their own manufacturing capacity, they're reducing their reliance on third-party foundries, giving them greater control over their supply chain, which is increasingly important in this unpredictable world.
It's like they're building their own fortress in a way, becoming more self-sufficient. Now, beyond those big picture investments, what about their product development strategy? What specific areas are they targeting?
NXP is laser-focused on high-growth areas that align with broader technological trends. We've already talked about their strength in automotive, particularly in supplying chips for electric and autonomous vehicles. But they're also making significant strides in areas like industrial automation, artificial intelligence, and of course the secure edge, which we discussed earlier.
So they're not putting all their eggs in one basket. They're diversifying their bets across multiple sectors that are poised for significant growth in the coming years.
Exactly. They're playing both offense and defense, solidifying their position in established markets like automotive, while simultaneously pushing into new frontiers where they see significant long-term potential.
It's a smart strategy. It's all about balancing the need for stability with the desire for expansion and innovation. But with all this talk of growth and expansion, let's not forget the elephant in the room, the global economic slowdown. How concerned should NXP be about the potential impact on their business?
Well, they're not immune to those headwinds, that's for sure. Their guidance for the next quarter, while not disastrous, is certainly cautious. They're acknowledging the possibility of continued weakness in certain segments, particularly in Europe and the Americas. But remember, they're also well positioned to weather the storm. They have a diverse product portfolio, a strong balance sheet, and a track record of resilience.
So they're keeping a watchful eye on the horizon, but remaining optimistic about their ability to navigate the choppy waters. But even with a strong foundation, there are always potential risks and challenges. What are some of the key factors that could derail NXP's plans, aside from the broader economic picture?
Well, the semiconductor industry is notoriously cyclical and competitive. New technologies can emerge, quickly disrupting established players. We already touched on the potential impact of RISC-V, which is just one example of the kind of disruption that could shake things up.
So staying ahead of the curve is crucial. What about internal challenges? Are there any areas where NXP could stumble?
One potential risk is their ability to execute on their ambitious plans. Building new fabrication facilities, developing cutting-edge technologies, and expanding into new markets. It's a lot to juggle simultaneously. Missteps in any of these areas could impact their profitability and long-term growth prospects.
So it's not just about having a good strategy, it's about having the operational excellence to implement that strategy effectively. That's where strong leadership and a well-oiled machine come into play.
Precisely. And they need to attract and retain top talent, especially in a field as competitive as semiconductor engineering. And of course, there's always the risk of unforeseen events like geopolitical instability, supply chain disruptions, or even natural disasters. These are factors that are largely outside of their control, but could nonetheless have a significant impact on their business.
So a lot of moving parts, a lot of variables to consider. This has been incredibly insightful. But before we wrap up our analysis of NXP, there's one more crucial aspect we need to address, and that's their commitment to environmental, social, and governance factors, often referred to as ESG. Are they just paying lip service to this increasingly important area, or are they walking the walk?
That's a great question, and one that deserves a deeper dive. We'll explore that along with NXP's overall long-term vision in the final part of our analysis. Stay tuned.
Okay, we're back for the final part of our deep dive into NXP Semiconductors. And as promised, we're going to tackle a topic that's becoming increasingly important for investors and consumers alike. ESG, environmental, social, and governance factors. It's no longer enough for companies to just focus on profits. They need to demonstrate a commitment to sustainability and responsible business practices. So where does NXP stand on this front?
Well, NXP is definitely making strides in the ESG arena. They've set ambitious goals for reducing their environmental impact, including commitments to renewable energy and waste reduction. They've also been recognized for their efforts to promote diversity and inclusion within their workforce, as well as for their strong corporate governance practices.
That's good to hear. But actions speak louder than words. Are there any concrete examples of how they're putting these principles into practice?
Absolutely. For example, they've implemented initiatives to reduce water and energy consumption at their manufacturing facilities, and they're working to incorporate more recycled and sustainable materials into their products. They've also launched programs to support STEM education in underserved communities and to promote responsible sourcing throughout their supply chain.
So it's encouraging to see them taking a holistic approach, addressing both their internal operations and their broader impact on the world. But let's be honest, there's always room for improvement. Are there any areas where NXP could step up their ESG game?
Well, one area where they could potentially enhance their efforts is in disclosing more detailed information about their environmental and social impact. Increased transparency would not only build trust with stakeholders, but it would also allow for better benchmarking and accountability.
That's a good point. Transparency is key when it comes to ESG. It allows investors and consumers to make informed decisions about the companies they support. But beyond the specifics of ESG, let's zoom out and talk about NXP's long-term vision. Where do they see themselves in the next 5, 10, even 20 years?
Well, NXP's vision is firmly rooted in their belief that the future will be defined by the secure and connected edge. They see a world where billions of intelligent devices interact seamlessly, creating a vast network that transforms the way we live, work, and interact with the world around us. And they're positioning themselves to be at the heart of this transformation, providing the essential building blocks, the chips, software, and security solutions that will make this vision a reality.
So they're not just thinking about the next product cycle, they're thinking about the next era of technological advancement. It's a bold vision, but as we've discussed, the semiconductor industry is incredibly dynamic. What are some of the key challenges they'll need to overcome to achieve this vision?
I think one of the biggest challenges will be maintaining their agility and responsiveness in the face of rapid technological change. The pace of innovation in the semiconductor industry is relentless, and NXP will need to constantly evolve and adapt to stay ahead of the curve.
Yeah, it's like running a marathon at a sprint pace. They can't afford to rest on their laurels.
Right.
What about external factors? Are there any trends or developments that could disrupt their plans?
Well, one potential wild card is the geopolitical landscape. The global semiconductor industry is increasingly intertwined with national security concerns and economic competition between major powers. This could lead to trade restrictions, supply chain disruptions, or even outright conflict, all of which could impact NXP's ability to operate globally.
So navigating the geopolitical minefield will be crucial for their success. Any other potential roadblocks on the horizon?
I think attracting and retaining top talent will be another critical challenge. The semiconductor industry is facing a global shortage of skilled engineers and technicians. NXP will need to compete fiercely to attract and retain the best and brightest minds, offering competitive salaries, benefits, and perhaps most importantly, a compelling vision for the future.
So it's not just about chips and software, it's about people. The human element is essential for innovation and growth. Well, this has been a truly fascinating deep dive into NXP Semiconductors. We've covered their financial performance, their strategic investments, their commitment to ESG, and their long-term vision. But as with any company, there are always more questions to ask, more layers to uncover.
That's the beauty of analysis. It's an ongoing process. And as we've seen with NXP, it's not just about understanding the numbers, it's about understanding the company's culture, its values, and its ability to adapt and innovate in a constantly evolving world.
Absolutely. So for anyone listening who wants to dig deeper, I encourage you to explore NXP's website, read industry reports, and follow the latest news and analysis. And remember, this is just a snapshot in time. The semiconductor industry is always on the move, so stay curious and keep learning. Thanks for joining us on this journey.
Until next time, keep exploring the world with a curious mind.